Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, this critical week ahead for the markets. As big tech earnings and the Fed meeting are looming, we discuss and debate with the investment committee. Joining me for the hour, Joe Terranova, Steve Weiss, and Jim Lebenthal. Let's check the markets to see how we're doing to start this week out. And we're green across the board, except for the Russell, which is giving some back. It's been the standout. But, Joe, the big story clearly is what lies ahead. You get the Fed decision on Wednesday, Microsoft, Meta, and Tesla on Wednesday, Apple's Thursday. Friday is the deadline to avert another potential government shutdown. By the way, the prediction markets are seeing a spike in bets on a shutdown with a 78 to 90% chance, depending if you're looking at Polymarket or Kalshi, which we have a partnership with. We'll get to everything around that. Big market moves that we need to discuss. Gold above 5,100 for the first time ever. There's an article out today. Gold has overtaken the dollar as the largest global reserve asset. That's certainly notable. What do you make of what's happening within the markets and all of these other areas that are stealing a little bit of the thunder as we look ahead to these critical earnings midweek?
The volatility that we expected in 2026, it's here. It's present. We're seeing a lot of the trends that we're building at the end of the fourth quarter, somewhat parabolic in their nature right now. You mentioned gold. Gold is giving speculators the ability to hedge portfolios, and they're getting paid to do so. So it's a combination of a parabolic momentum move and the debasement trade, the concerns that are out there in terms of owning currencies. The dollar continues to slide, or maybe owning bonds. We see what's going on in Japan. And global central banks are diversifying away from currencies and bonds, and they are buyers of gold. Just look at what Poland announced recently, one of the largest buyers of gold from a country right now in central banks. So I think it's the volatility that really is the headline. We'll talk about what we're seeing in the Mag 7, the relationship with semis and software, but the volatility is giving you opportunity.
You know, Weiss, it's a lot of focus on Japan, what's happening there, the yen and Japanese bonds. Obviously, what's happening in gold, what's happening in markets outside the U.S. in terms of stock markets, emerging markets, the EEM hitting an all-time high yet again today. The average country ETF is up 6.5% year to date versus the S&P, which is up just 1%. That is notable as well.
Yeah. So clearly there's vestiges of the Sell America trade, number one. I think that's part of it. I don't think it's a big part of it. But there's also believing that you can get better performance outside the U.S. and you want to diversify a little bit. Look, my diversification outside the U.S. amounts to a position in Alibaba, and that's it. Ultimately, I think that we have reversion to the mean, and that with the setup in the U.S. in particular, economically, that it's still the place to be. To me, emerging markets, sure, you should have an allocation there if you're a portfolio manager that clients expect diversification. But if you're pure alpha, and you're willing to trade it, fine. But for me, longer term, to me, it's always buy America.
I thought this sort of flies into the face
right.
of what the narrative has been about why people are so bullish
right.
about the U.S. stock market for this year. Remember, people have been saying, hey, it's really hard to find bears around.
Yeah.
Everybody seems to be so bullish. Yes, almost until Davos. And then Davos sort of reignited this question about Sell America. And now here we are focused on the fact that, once again, it's like emerging markets and outside the U.S. are outperforming after coming off an outperformance period
right.
already last year.
Well, and there it's the time frame that matters. So to Joe's point, what I've been saying, increased volatility, and that's what we're seeing. The S&P was down for the last 2 weeks, so that's part of what you're talking about. I do think in near term that there is risk to the market of a drawdown. 5%, maybe. I don't think it's 10%, but it could be 5%.
What initiates that?
What initiates it are two things. One, I think, is extremely unlikely, which is that the Fed taking a very hawkish stance on Wednesday. I just don't see that at all. The question is, right now, how many cuts are in the market? I think there's one cut reflected in the market.
Yeah, I mean, if you look at what the prediction
right.
is for Wednesday, when, we'll get the decision, we'll get the news conference, we'll speak to Gundlach, and we'll sort of rekindle all of those things in our coverage that we've gotten used to doing. The market's expecting nothing on Wednesday.
So the other thing that could initiate it is if we have a very disappointing reporting period, specifically if we have that in the broadening of the trade. So if we have the big companies like Caterpillar, it's done so well, comes out and says, hold on, as we've seen with Deere, where they just can't get it right. But I don't really see that either, because I think the setup economically, that may cause a momentary dip, but that's a buy the dip. Then you have to focus on AI. You have to take a look. So if the AI carriers of the torch, right, like Meta, like Microsoft, if they all, and I think it's extremely unlikely also, come out and say, we're putting the brakes on spending, or their quarters are disappointing relative to the cloud, then you could see an issue. I think those are all unlikely. The most likely is continuing to see what we've seen in Davos, what we saw earlier or late last year and last April, is policy coming out of Washington. That could be the biggest canary in the coal mine. Just don't know.
Sure. Jim, as we look ahead to these mega cap earnings, Wolf thinks that what these companies deliver, to Weiss's point, is going to be good, and it's going to be the catalyst for people to go back to tech. Yes, I get that the market can still be broad, and the so-called broadening trade can still do well. But I said last week, looking ahead, we're going to be reminded of something this week. We're either going to be reminded why we've started to diversify away from those names, or we're going to be reminded why we should just take advantage of the dips and go right back to them.
Yeah, we are going to be reminded of something. We're going to find out pretty quickly. And just to start with, I agree with Wolf that the reports should be good. And there's no reason to expect that any capex plans will be reduced. That would be a big surprise. But I think the question, and you just laid it out, is how do the stocks respond? And to partially answer that, I would say, let's note that the three stocks we're talking about this week, Microsoft, Meta, and Apple, have not traded well recently. They really haven't.
Meta has. Meta had not. Then all of a sudden, Meta starts waking up. Meta ran 6% last week, so it's making a move into the print.
I hear you on that, and it's a good point. And even today, there is some short-term movement to the upside in the other two names as well. But generally, over the medium term, these stocks have been heavy. And it's for that reason that I would think that the trend is actually probably going to continue to be lackluster responses to good earnings reports. Let me just state it again. Earnings reports are going to be good for those three. I would not expect a robust share price response in the three of them just based on recent moves. I'm not disagreeing with you about what you said about
Meta. After what Meta, let's not forget about what happened last earnings period. Meta, and you can see it right there on the far left side of your screen. That's a 3-month look of what's happened. Meta comes in. There are all these expectations that are really high. They talk about spending, enormous amounts of money. The market once again smacks it down, and the stock really hasn't done anything since, until just starting to wake up in the last few days.
Look at that chart. And if you look at that chart, there's a lot of people trapped in there. There are. And I think you get any short-term spike after good earnings, there may be some people heading for the exit. Just to be specific about what I believe, both short-term and through the end of this year, is that the equal weight, small cap, international stocks are likely to outperform the S&P 500. Having said that, I don't think the S&P 500 is a sell here. I don't think these stocks are a sell here. I just think you're going to get better relative performance outside of tech.
I don't know what he means by trapped. What does trapped mean? I mean, a permanent compound.
Why are you asking me? Ask him.
Because I need an interpretation. So what do you mean by trapped?
I need to be the buffer between you guys?
Yeah,
ask him.
Yeah, so take Meta. What's it off from its high over the last year?
High was 15, over 800.
Yeah, so 15-odd%.
Right.
I mean, same thing with Microsoft, roughly, round terms, 10 to 15%. There's people who bought at those highs. I mean, the stocks were at those highs for quite some time. Correct. And now there are some people, and I'll grant you, Steve, there's a lot of people, and I think this is the point you want to make, who are long-term compounders, have been in it for a long time. But there's a lot of people who bought it and are down 10, 15%. They're disappointed. They're seeing the equal weight S&P 500 run. They're seeing small caps run. And they're saying to themselves, boy, if I get a little pop here out of Microsoft, I think I'll take my money and go elsewhere with it.
Yeah, I just don't see it as trapped. It's a highly liquid stock. I think trapped means when you're in a small cap where there's no liquidity, you can't get out.
Okay, that's not what I'm saying. I'm saying people who are underwater.
I mean, I would I would just question the thesis to begin with that if these reports are good, people are going to use them as opportunities to sell.
I disagree with that.
Just saw it with Meta.
Validate their thesis of why
People
they
did
went in.
not sell Meta because the report was so good and they were looking to deploy
There was
those assets.
financing, yeah. I got you.
That was the story. It wasn't like an aside. Oh, hey, the people just decided to sell it because things had been so good. The market was spooked by what Zuckerberg and company had to say last period and sold the stock.
Scott, I don't think I'm saying something outlandish. I hear you push back. There are plenty of times, and I'm saying I think this is one of them, where good reports are met with selling. That's what I mean. That's not outlandish to say that could happen. I could be wrong. Of course I could be wrong. That's what I believe is going to happen. We'll see. You phrased it as we're going to get an answer. I'm telling you what I think.
Meta would have to rally 18% to get to its August 15th high at 796, the intraday high. Each one of these stocks, as you have rightly identified, these are out of the Mag 7, the names that have underperformed, in particular for Microsoft and for Apple. I disagree with the premise that people are going to be looking to get out. I actually think what you're beginning to see and what you will see further is if these stocks are good enough in their earnings report. Here goes Mag 7 taking the lead once again. Equal weight steps back into the shadows. I think that's what's happening.
That's the wolf point. Our sense is they say that these earnings will serve as a catalyst for investors to rotate back into tech comm services as the largest companies continue to provide solid results. We know that the growth rates of these companies and the growth in earnings, they're going to be tremendous. They may not be at the same growth rates that they were. And you'll have to, as an investor, reconcile that in deciding how much you want to pay up for even the slightest bit of slowing growth.
And then next week you get the all-stars of the Mag 7. You get Alphabet and you get Amazon, which are performing well.
The all-star, like so far this year, remember,
over the last several months,
Amazon didn't make the all-star team last year.
Over the last several months, Amazon has taken the lead along with Alphabet, and I think collectively there's a lot of people who support the premise that Amazon could have a good year.
Amazon was relegated.
It was
last year. They didn't make the Champions League.
Absolutely, but more recently, it has taken the lead along with Alphabet. So I just think it comes down to the dynamic that exists, the relationship that exists, and these relationships are important between equal weight and the S&P, the Mag 7, and I think you'll see a turn there if we could get good enough earnings and reaction from these names.
Street is positive as usual. I don't know that you would expect anything different, but Amazon named top pick into earnings at Wells. Meta gets upgraded to a buy. The target's a 900 at Rothschild. You have Apple, target goes up to 315. That's at JP Morgan. Overweight is the rating. MoffettNathanson raises the target to 241 as well. And Wells Fargo suggests that you could get an upside surprise, as a matter of fact, in capex as this arms race continues. Don't discount that by too much. Good,
because that will flow through to a lot of the stocks that I own, like a Cisco or a Qualcomm, that are going to be beneficiaries of increased capex. I'm not sure that bodes well for these hyperscalers, right? Haven't we seen over the last year and a half that heightened capex has at least half the time been met with share price declines? I do want to be clear here for everybody who's listening. One.
They're not all created equal. That's how the market has been voting. What was okay for an Alphabet has not been okay for a Meta. It depends on the amount of capital that you're deploying and how you're deploying it and how the market judges the return on invested capital to be.
There has been differentiation between how the share prices of the companies have responded. I agree. And those ones that are using more debt finance have had a harsher response. However, it has been, in my opinion, more quarter by quarter. There have been quarters that these companies have been applauded for spending more. And there have been quarters where heightened capex has not been met with a good response, regardless of the differentiation between how it's being financed. I think at this point in time, with questions that we've been wrestling about on the edges of debt financing and the reduction in free cash flow, that heightened capex is not likely to be reflected upon well in the hyperscaler share prices. I'm making predictions. I could be wrong.
Microsoft's important. Microsoft's important for this trade that currently exists between software and semis. If Microsoft can come out, surprise the street, reverse some of the negative sentiment, see people return, I think overall that's going to have a positive impact on software.
Well, it's going to have a positive impact on semis. If these companies continue to talk about spending gobs of money. Obviously, the trade that's worked is going to continue to work. I think Microsoft. I don't know that Microsoft's a save the day for all the software stocks that have struggled, because there are a lot.
Wait a second.
Have been deemed to be deserving.
Be careful with that. We live in a world of passive investing. You know as well as I do that Microsoft is in all of these major ETFs that are defined as software ETFs. So just because of its overall $1 trillion plus size, if they come out, they perform well. You have an environment where software is dramatically underperformed semis. Everyone's looking for the mean reversion. All I'm saying is you may see some of that unfold in the next several weeks if Microsoft can actually deliver.
I think that'll be a very brief moment in time.
Don't disagree.
Because ultimately, they're going to go to what Scott's point is about, determining which are the winners and losers in big cap. They're also going to continue to determine who's a winner and loser with AI and software.
I just don't think you can answer those questions anytime soon.
No time soon. No time soon.
You can maybe for Microsoft, but I'm not sure that you can fully answer it for CRM or a Now or those names, and I'm not necessarily sure, though I obviously don't know,
that's a great point.
That a Microsoft great report funnels down to the names that have struggled dramatically. Cisco got an upgrade today. That was one of the names I think that was thrown out on this desk here to outperform from inline, target to 100 from 80. That's at Evercore. They see a number of tailwinds. Jim, I know, Joe, you own the stock in the T, but Jim, you own it as well.
This has been a great stock. I mean, I've owned this for over 10 years. It's given basically just a little bit above the S&P 500, just a little bit, but with an 80% beta, meaning it gives much less than the market risk. And I think that's going to continue. This is a very attractive valuation. It's a company that is selling the hardware into the data centers. And it's doing it not just as a component provider, but as an enterprise-wide accumulator, not just of hardware, but software and security. So it goes to companies and says, we can do all of this. That's a very compelling sales pitch, and it's working for them. And you're seeing it in the pickup in growth rate. You're seeing it in the pickup in earnings estimates. They're on a January 31st quarter, so we're not going to get results from them until mid-February, but I expect those results to be very positive, and I think the analyst community is picking up on that.
Let's talk about the banks. As we look at more divergence between some things, can we look at the year-to-date, guys? Can you make quick for me JPM versus Goldman? I want to show something as we discuss this trade and talk about something that Joe.
I just want to say I strongly agree with the concept that there is no such thing as a forever stock. Now, I trimmed JP Morgan. I'm still going to hang on to the small piece that I have. But there's been a few times, Joe, that I've been in the seat you're in right now where I've sold something and people say, how could you possibly sell that? Scott, just for amusement, I'm going to remind you. Visa, remember around this time last year I sold it and there was the question about my education credentials? It was kind of funny, actually. I hope you do remember it.
I don't.
I don't know.
Really? Jim Cramer said, remember this? Jim Cramer said, anybody who sells Visa, I have to ask where they went to school. You don't remember that?
I thought you were insinuating that I was the one who had questioned your education credentials.
No, you just.
When in fact I did not, and I have no recollection of that in any way, shape, or form.
Okay, you just took glee in it. It was funny. It was funny. I'm reminding you of a funny moment.
Okay.
Don't take it as an attack. There are nothing. Nothing is a forever stock.
Did you shovel too much snow this weekend? You seem a little.
No, the tractor.
Did you have a Red Bull before the show again?
I did.
I did.
I feel restrained. This is an intellectual discussion. There is no such thing as a forever stock. There are stocks that get labeled like that. Look at Berkshire Hathaway, okay? And imagine if I had sold it, or Joe or Steve had sold it a year ago, we would have been lambasted for. How could you possibly sell Berkshire? Would have been the right thing to do, relatively speaking. No stock is a forever stock.
That's an event-driven thing more than anything else.
How about if I'd sold it immediately afterwards? After the announcement of his retirement. Well, I mean, I'm going to stick to the point because I think the point stands. There is no such thing as a forever stock. That can lock you into things that you'll wish you got out of.
Okay, Weiss, what do you think about this move selling JPM?
Look, I don't think there's anything wrong with taking a profit ever, and everybody's lined up on one side of this trade with JP Morgan. I think you do want exposure in the group because of the IPO, because of the refinancing, because of the LBO cycle coming up. And to me, that's best situated, obviously, I think, in Goldman Sachs. So, so I have no problem selling J.P. Morgan. I wish I owned it for the period. The only other thing I'd say is that Jimmy's soliloquy was a great reason not to do live TV, because that would have been cut out in the tape. Like, what are you talking about? I have no idea the point you were making. You know, aside from
Steve, there's a lot of things you don't know, and we'll just add this to the list.
You know, I would just say, I would just say that I would call note to this that maybe it was the Red Bull, but we've heard Jimmy so many times this show take a short-term view on things rather than being a long-term investor he is. So,
well, this is a great point. This is a great point.
This functions of the volatility in the market.
No, it's a great point. I am giving you my short-term views. This is great. I'm not taking action today. You don't see me selling anything today. All right. I said what I said about the hyperscalers. You don't see me selling Microsoft. I think for a long-term investor, you're supposed to hold them here.
Is it a sin to actually trade in an environment where volatility
I'm
increases?
Not if you have the skills. Most people don't have the skills.
Okay, but I think 2026, you know, again, you made a great point before. We're not going to find out the answer. I think there's so many things right now that are headwinds for the market that we're not going to find the answers to for many, many months. And I think the market in the interim is just going to spin to a lot of different places. You could take advantage of that.
Okay, but to the end of the year, profits growing, accommodative Fed, economy growing. I'm just saying, short term, long term, I'm not making any moves because long term, I feel pretty good.
Okay. Up next, Joe has another move to tell you about. We will fill you in the energy markets, too. We got to talk about that. All right, welcome back. So let's get this other move, and it is related to what's been happening in the energy markets, I think.
Yes, it is.
I'm not sure that it's a snowstorm-related trade,
no,
but
it's not.
What is it?
It's buying more of the OIH. I established a position in that last week. It continues to move higher, another new 52-week high. I like the opportunity that this diversified ETF gives you with oil field services names, whether it's Schlumberger, Halliburton, Baker Hughes, which is in the ETF, and their ability to go out and search for oil and gas throughout the world. And I think that's where you want exposure. Energy is starting off the year as one of the strongest sectors.
Isn't it
rightfully
the best?
So.
Wasn't it the best? Something
right
like
there.
That.
I think the materials probably after gold and silver.
It's up 11% in a month.
Yeah.
Yeah, materials is still number one, barely.
Materials and energy, that really has been the story so far year to date. Kudos to Tom Lee on that, by the way. But the OIH, I think, is the right way to get some diversified exposure to the oil names. And I still see the oil market, while getting less short, still you need to see some of that short interest come out of it.
There are some energy stocks in Mr. Lebenthal's neighborhood. See what I did there?
I did.
Did you get that?
I did. Mr. Rogers.
Yeah. Well,
why don't you just show up without the blazer on today?
Well, because it's the New York Stock Exchange.
Should take
I'm wearing a tie and a jacket, you know.
You should make him take it off for the sea
commensurate with the seriousness of this edifice.
Okay.
It's interesting. Crude oil at just under $61 a barrel. I don't know what I missed. Okay, but I'll keep going. At $61 a barrel. That feels like a breath of fresh air, right, after where crude oil has been. I mean, that's down tremendously over the last year, down 20%. We started out this year with a faintly negative feel on crude oil because of all the bad news that was out there. OPEC increasing production, potential peace in Ukraine, China demand not picking up that much, and they'd already filled their inventories. Now we're seeing what happens, and we talk about this on air a lot, when everything is priced in. There was just all the bad news priced in, and it left room for oil and natural gas to move up when something like a winter storm hits, or there's kinetic wars in Venezuela. So I think crude oil can stabilize between $60 and $63 a barrel, and these companies make a lot of money, particularly with natural gas at $6.
This is where the $7 now. This is where the story has been over the last 7 days.
That will come off. You know that will come off, right? When the storm
eventually,
passes.
But the storm kind of has passed, and it's up 33% today. Why? Yep. Because I said, as you look at the forecast, it looks like there's more stuff coming.
So if you look at an ExxonMobil, which bought XTO whenever that was 10 years ago, a major natural gas producer, that's why ExxonMobil is up so much, and they will reap great rewards over the next 2 to 3 weeks. But let's not kid ourselves and think that natural gas is going to stay at $7 a month, 2 months from now.
Of the day. So Goldman has an interesting gaming call today. They say expect another tough quarter for Vegas. They still name Las Vegas Sands their top pick. They reiterate their buy. $80 is the price target there. However, they do lower Win's target to 140 from 148, and they reiterate the buy there as well. Jimmy, we go to you first, because I've ended on Win, and that's your big winner.
Yeah, well,
has been one.
It has been. I mean, it's come off a little bit. I'm thinking of adding to it. I had trimmed it not that long ago. But the thought process here is, let's be clear, Las Vegas is not doing so well. In part, that's because the comps were unbelievably difficult in the few years after the pandemic. I mean, everybody was there. And that has died off. There's questions about whether that's cyclical or secular. But if you look at Win, the reason to own Win, and also, Joe, to your Las Vegas Sands, is the Macau exposure. And even more than that, the Dubai resort, which is going to open up in less than a year, maybe a year, but should be less than a year. And that's where the real boost in earnings is going to come from. That's why I own it.
It's time for final trades, boys and girls.
You know, we can sit around the fireplace as the snow comes down, the Blue Jays and Cardinals feeding at the feeder, and buy BlackRock, which is going to benefit as everything rallies.
Great stuff. Weiss?
GLD, I think momentum continues in GLD.
Joe?
Wonderful day, Jimmy. Wonderful.
Joe?
Every day.
Thermo Fisher.
Okay.
Go ahead.
All right. Well, okay. Closing bell, 3 o'clock.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Monday, January 26th. It's 4:53 p.m. Eastern Time. And we just saw some clips from the halftime report earlier today. And you know what we're going to do? We're going to take a look at the stocks and ETFs that they talked about on the show. Well, not all of them, but a good portion of them. Let me just show you the list here real quick. We're going to look at the indices like the SPY, the QQQ, the Dow, the Russell, the Euro stocks, which was not talked about, but I'm going to bring it up. We'll look at Tesla, Apple, Meta, Microsoft, Netflix, and then here are about 23 stocks and ETFs that they talked about on the show. It's quite a few. I've already reviewed them. I can tell you which ones are the strongest ones, and as soon as we start doing the analysis, and then we also have some member requests. So we got those 4 stocks down below. Well, one ETF. So let's go ahead and do a quick review of the markets. As you can see, the Dow Jones, it closed up 0.64%. Okay. And NASDAQ was up 0.43. The S&P 500 was up 0.50. Russell 2000 down 0.31. It did stabilize, though. You can see here from 11 a.m. through 4 p.m. it basically didn't really move much. So that's interesting. Let's take a look at the heat map. This is going to show us the individual stocks, how they performed today. Apple was up quite a bit, 2.97. Google was up 1.57. Meta was up. Broadcom was up. Microsoft. Tesla was down 3.09%. Nvidia was down slightly. Micron and AMD were down a little bit. So was Intel, down 5.72. So interesting. The financials rebounded a little bit today. The healthcare stocks look pretty good. The utilities were mostly in the green, and so was basic materials. But let's take a look at the groups, actually. That's also important. So you can see the strongest sector today was communication services, up 1.13%, followed by technology, financial utilities, and healthcare. Basic materials was up as well, but just up 0.05%. For the 1 week, though, basic materials and energy have been the leaders. All right, now let's get into those stocks. And we're going to start off, like I said, with the index ETFs. We'll start off with SPY. And we're using the Ichimoku indicator. And if you're unfamiliar with this, very quickly, I'm just going to give you a quick little synopsis as I do, because there are always new people coming to this channel and they're not really familiar with what this is. And so this might help your trading. And at a minimum, you're going to learn something new today. So what is the Ichimoku indicator? It's this. It's what you're seeing right here. It's comprised of the Ichimoku cloud itself, which is the Senkou span A, the Senkou span B, that light colored purple line there. And that's what creates, now these are moving averages, okay? You've got the green line, that's Tenkan-sen, the 9 period. It's the midpoint, okay, the last 9 periods. You've got the Kijun-sen, which is the midpoint of each candle, all right? The highs, the lows, divided by 2 of the last 26 periods. And that's plotted right there. Then you've got Chikou span. That's the lagging line there. And that's actually the current price projected 26 periods ago. You want that white line to be above the candles. That's really important for a bullish trend. So we want the green line above the red line. And then how does this Put together, the Senko span A is comprised by taking these two moving averages. It's the midpoint of the two moving averages, and it's projected 26 periods into the future. And the Senko span B, the purple line is projected, is the highs, lows of the last 50, divided by 2 of the last 52 periods, in this case 52 weeks. And that is, instead of showing it under the candle, it's showed 26 periods into the future. So that's how the whole thing is comprised. Then we've got the dotted yellow line, that's the 200-day moving average. As you can see here, the SPY ETF is in a very strong uptrend. It's above all the moving averages. All of the elements of the Ichimoku are looking very strong here. Let's throw some support levels. It's also above that 5284 level, which was a daily level from these prior lows. Everything looks good on both time frames, the weekly and the daily. That's why you'll notice there's a blue flag right there. If any of the stocks and ETFs I discuss have that blue flag, it means that they are bullish on both time frames. Here's the QQQ ETF. Also, same situation, daily chart. You can see prices above the moving averages above the cloud. There's a Chiku span above price, right? So, although I will say this, it is consolidating. You can see that it is kind of stuck in this consolidation area, but it is bullish nonetheless on both time frames. Here's the Dow DIA ETF, also looking pretty good, but also consolidating under that 496.34 level between 484 and 496. It's been just stuck in that range for a little bit. So we'll see if that can change in the near future. You got FEZ, the Euro Stocks 50, which is looking the most bullish out of all the indexes, all these ETFs that I'm discussing here. So what happened with this one? Well, you can see it broke through this resistance level where price was getting stuck right there. It actually broke through that level today. Happened on higher volume. Look down below, right there. The directional movement is looking pretty positive. What we're looking at here, what we're looking for is the green line to be moving up, the red line to be moving down, and that white line, which is the ADX9, which represents momentum, to be moving up. So the momentum is to the upside and it's breaking through levels. I like this one quite a bit. Why are the different moving at these resistance levels and support levels colored differently? They're based on different time frames. So this purple one is a monthly level. This one is a daily level. So if I go to a monthly chart, for example, I can go back in time and I can see where the prior high was, and that was all the way back there in 2007. And so we're breaking through that level. Like I said, this is gonna. I think the Euro stocks are gonna do quite well this year. Um, there's gonna be more investment in Europe. Russell 2000. Not so great today, down 0.31%. It dropped a little bit more today. It's under the 9 period. So this is not telling us to be adding any new positions. I mean, you could certainly be holding a position. This might be a very short-lived pullback. Sometimes you get those like right here, and then you can see how it quickly changed course and moved back up again. So we might see this pullback maybe as far down to the 258.20 level before rebounding. And it could certainly break right through that. And we'll know exactly what's happening because we're watching the charts and then we can act appropriately based on our analysis here. So the VIX is also up 0.37%. It spiked up a little bit, but it did find resistance at the Kijun in the 26 period there. We want the VIX to be low actually at these levels. It's pretty conducive to a more bullish market. This is the ProShares K1 Free Crude Oil Strategy ETF. For those who don't want to have to deal with the tax, you know, duties of putting in your K1 form, you don't have to do it with this particular ETF, which is nice. It's called, like I said, ProShares K1 Free Crude Oil Strategy ETF. And this particular one I do like because on the daily chart, price broke above the 200-day moving average. Okay, it's above the Tenkan-sen, it's above the Kijun-sen. We have a bullish cloud, which means that the Senko span A is above the Senko span B, unlike back here when we were under the cloud. Notice how price was also dropping and continued to drop. Now there's a little bit of bullishness happening here. The only problem with this particular chart is the fact that, or this specific ETF, is the fact that the weekly chart is not telling us the same picture, right? So we don't have that quite yet here. Personally, I like to see both time frames telling me the same story, and I don't see it with OilK, but it is, at least recently on the daily chart, showing a lot of strength. Let's get into the Mag 7s. All right, not all of them. Some of them are in my portfolio, and I cover those of course, with members. And by the way, here's a new perk, guys, for members. Let's talk about that just for a second. So, yeah, when you click the join button here, first of all, we did post a new members only video yesterday. Um, and there were 27 new stock ideas. I went over my entire portfolio. It's an hour and 8-minute video. If you could sit through that, of course, And so, yeah, basically, um, if you now we have this new perk for all members. You click the join button there, which is right next to the subscribe button. Don't worry about the fact that it says euros here. I mean, it's also US dollars, 4.99, okay, 24.99 and 49.99. I'm in Europe. That's why this is popping up like this. But Blue Cloud supporter, 4.99 a month. Now, what is the new perk? It's this early access to select videos, daily videos. So, on certain videos, like this specific video right here, it's going to be posted prior to being posted to the general public. So, if you want to get access to my videos a little bit sooner, this is the way to go. At least become a Blue Cloud supporter level. If you become a Blue Cloud trader, you'll also get that perk, but you'll also get access to that exclusive member only video that I just talked about, plus the older ones as well. Right? You won't get that under Blue Cloud supporter. Under Blue Cloud Legend level membership, you'll get that perk. You'll also get the member only videos. You'll get day trading videos, and you'll get daily stock and ETF trade updates whenever I post a new trade. I basically put right next to the posts. Once you become a member, there'll be a new tab that pops up next to posts. It will look like this. It will say membership. You click on that, and you can see my posts. Really simple. If you don't want to become a member, and I can't imagine why you wouldn't want to do that, at least subscribe. It's free to subscribe. Hit the notification bell, you know? All right. So let's get back. Let's get back. So Tesla, let's talk about Tesla, which is down 3.09%. I've mentioned how it wasn't looking particularly strong here because we had a crossover, a negative crossover. That's when the faster moving average, the green line crosses under the red line. That's very bearish. Okay. And then we also have the Chica span here. You can see for multiple days now, it's been under price. Okay. That's also bearish. Um, and the price itself, okay, it actually today dropped and closed under the cloud. Now, I will say this in 2 days from now, January 28th, their earnings are coming out. We're going to have basically those earnings announcements can be a doozy. They can go up quite a bit and they can also drop quite a bit. It depends on how Wall Street takes the information. So it's really up to Wall Street to decide that, right? And the buyers and sellers will react to the news, and we will see what happens on the charts. And of course, I'll share that information with you guys. But right now, Tesla's not looking particularly strong here going into earnings. Okay. What about Apple? Apple also coming out with earnings on January 29th this week looks a little bit more bullish. As I've mentioned in prior videos, this 244 level, $244 price level, which was going back to these prices, but I'm sorry, back to this time frame in October of 2025. We reached it and we are finding some support. Okay. You can see right there that price is staying above it. In fact, it gapped up and then closed above the 9 period. So it was up 2.97%. Is it something that I would be adding a position to if I didn't have, and I don't have a position in Apple, but would I be adding a position here? And the answer is no, still, because it's still under the cloud. One of the rules of Ichimoku is you don't want to be adding new positions when price is under the cloud. And we still have a bearish cloud here, right? Faster moving average is under the slower one. What does the weekly look like? It's under the Tenkan-sen. It did find some support at the Kijun-sen. We look like we're bouncing a little bit here, but you are taking a little bit more of risk basically by taking a trade when the elements of the Ichimoku are not giving you the all the positive things that you want to look for. Like, for example, back here, okay, when price broke above the cloud back in July of 2025, or yeah, June 30th, 2025, right there. And if I was to measure that move until it broke back into the cloud, it was a 31.1% move into to that in 6.1 months. And I mean, you could also use the crossover right there too. So from that point to the crossover, which happened up here, was a 33.38% move. What's happened since it got into the moving averages? It's dropped 8.3%. So it's a little bit broken. is what I'm saying. And we have a series of lower highs and lower lows, right? Which is evident here, right? So you get this low here. I'm sorry, this high is lower than the prior one. This high is lower than this one. And we have a series of lower lows. This low is lower than the prior one and that one too. So it's been dropping. All right, let's keep going. Let's take a look at Meta. And Meta broke through. Now, this specific stock, as I mentioned recently, has created a higher low from the prior low. Looks more bullish to me than Apple. Obviously, there's Apple, there's Meta. We have a higher low. We broke above the cloud. We don't have that with Apple, right? We're still under. We do have still a bearish cloud here. So not everything is perfect with Meta, but it is showing a lot more strength going into earnings, which are going to happen on January 28th. So we'll see what happens with this one, but it is still technically under that 200-day moving average, right? There's the daily chart, and let's look at the weekly. Here's the weekly chart. So the weekly chart, you can see also that we found support inside the cloud, and it bounced, and it's now testing the top of the cloud, and there's a 26-week Kijinsen, the red line. So yeah, I'm curious to see what happens once the earnings announcement is made. But I do like the fact that the directional movement index has turned bullish slightly here. The green line is moving up, red line is moving down. The ADX hasn't started to show momentum quite yet, though. Probably not until that earnings announcement pops in. Microsoft, more bearish. It's under the cloud. It showed some strength here these last 3 days. It's up 0.93%, and that also is coming out with earnings on January 28th. Here's the weekly chart. Inside the cloud, found a little bit of support, also testing the top of the cloud. Netflix, this one here has pulled back, and as I mentioned in the prior videos, we've been finding some support here at that 82.11 level. You'll notice that price had pulled back, stalled right there, and bounced. Came back down to that exact same level right there and bounced. And where are we now? We're right there again. That's the weekly level. Here's the daily chart, and you can see, yes, price was down 0.49%, but what you're not seeing is the fact that it actually gapped up in the morning and then dropped. So if we look at the 5-minute chart, we can see that, of course. There's the so let me just show you guys this right here was hold on a second. So the prior day was right there. It was around that level. The closing price from Friday, January 23rd, okay, 4 p.m. And then there was the opening. It basically gapped up today, right? And this is where it closed at 85.70 under the cloud. So yeah, it's showing a little bit of strength. Would I be buying Netflix here? No, because it's still under the cloud. And here's a weekly chart for you too. But it is showing some strength, and there's a possibility that it could bounce. That's all I'm saying. All right, let's get into the stocks. We're not going to spend too much time. You guys understand the rules now of what we're looking for, and these top ones are the strongest ones, in my opinion. And then once we get into those other ones below, the ones without the blue flag, not so much. So Alibaba looks good. There's the weekly chart. There's the daily chart. Um, Price breaking above the Tengensen. Okay, so I do like that. And yeah, it was down 1.07%, but look, it's a bullish candle, and we did technically, okay, it was at 171.37. You know what, guys? Maybe by a couple of pennies. We're only like down 2 pennies under the Tengensen, technically speaking, but I think that we can give it a pass on this one. Um, the cloud has also turned bullish. We're above the 200-day moving average, and here's the weekly chart again. Right? Everything is looking pretty bullish here. The rising 200 on the weekly and a rising 200 on the daily. So I think that it's looking pretty bullish. That's all I'll say. EEM, emerging markets, a weekly chart. Let's look at the weekly. There's a weekly. It's above that 58.29 level, which is a monthly level going back to 2021. And it's looking strong. I like emerging markets. GLD up 1.46%. It gapped up again today. It did end up closing as a reversal candle. It's a spinning top. I am concerned about that a little bit. Let me show you guys what I'm talking about. There we have a cheat sheet here real quick. We'll get into that. This is my Twitter page, x.com @BlueCloudTrader. You can find me there. Scroll down, go to highlights, scroll down some more, and you will find the candle pattern reference sheet, and the single bearish candle that we're looking at is this bearish spinning top that I'm going to circle right there. Okay, so that is a bearish candle, and that's what we're looking at right now here on in TC2000. It's a bearish spinning top. Why is it bearish? Well, there's a lot going on in that candle, believe it or not. If you look at this on a 5-minute, we can do a little micro analysis on that spinning top. So what does that mean? Here's what happened basically. Here's the history. So here we were on Friday. See that dotted red line is actually the closing price from Friday. It gapped up, which was good, which is why we're up 1.46%. But then what happened? You can see that it did not continue for the most part moving up. It just basically consolidated in this box on the 5-minute chart, right? And then what happened? It got under. It dropped. And so if we look at the opening price, we're actually under the opening price. That's the dotted green line. Okay? 9:30 a.m. right there. So yes, we're up for the day, but this is showing bearishness, and there's a potential pullback here based on this. So I never add new positions when I see a reversal candle. All right, unless I get into the stock or ETF early in the day and it hasn't formed quite yet. OIH, let me just show you the weekly chart, which is still very bullish overall. You get a very nice strong uptrend and everything. But again, yeah, this is still, we're still in the early phases of this candle forming. It's only Monday, so we can't really determine what that outlook is gonna look like until Friday. OIH on the daily chart. Let's look at this one. This is the Van Eck Vectors Oil Service ETF, one of the stocks that they brought up. Another spinning top. Does it mean that it's definitely going to pull back? No, but there's a higher probability. That's it. SMH. Okay, this is a positive. This is a bullish spinning top. After a pullback, we see that right there because it's occurring after a pullback, after it dropping and then finding support at the Tengen-sen. So I do like this, even though it was down 0.32%. Here's a weekly chart for that one too. Very strong still for SMH. Here's TMO, Thermo Fisher Scientific. Weekly chart looks good. And daily does as well. It was only up 0.10%. Nothing major happening here with that one. XLE still hasn't been unable to break through and close. I mean, it broke through. It gapped above the 49.49 resistance level, but look what happened. Price break dropped right back under, touched the 48.96 level, and then came back up a little bit. These are two levels that you can see that I've drawn based on these prior highs. Let's go to the weekly chart for a moment. You can see that high right there and that high right there. That's where those are derived from. And we're finding some support, but we're also not breaking through. So this is a little bit concerning, I'll be honest. It was only up 0.06%. So let's see if that can change this week, tomorrow, maybe the next day. XLK, we had this symmetrical triangle. Price dropped under it, gapped under. It's coming back now to the apex of the triangle. What's going to happen? Well, since this is the technology ETF, I think it's waiting for information, right, about those stocks that we talked about, the Mag 7 stocks. And depending on how those perform, we'll either see this drop back under the cloud like it did back here on Tuesday last week on January 20th, or will it break through and just continue to the upside? It's still not very clear because of even though we're still technically above the Tengen-sen, Kijun-sen, and cloud, it's really hard to determine this because we are right under that trend line that you see right there. Here's the weekly chart for you. Okay. Again, very similar. It's just like right under that trend line, which is very important it needs to break through it. XOM, ExxonMobil Corporation, gave us another negative candle. We had a doji, and then it closed under the prior day's close, down just 0.10%. There's a daily chart. Here's a weekly chart. We're a little bit extended, um, but it's holding up, I guess, to some extent because it did not close under the low of that little spinning top. So we'll see if it can recover tomorrow. BLK dropping in under the Tengen-sen, but holding up above Kijun-sen. That's BlackRock Incorporated. Financial services down 0.74. Even though financials were up today, This one was down. Here's the weekly chart. Nothing really great here because the Tengens and Kijunsen are about to merge. That's a positive, but again, the daily chart is showing some weakness today. Let's see what else. BRKB, which is Berkshire Hathaway, that's under the cloud right now. We have a bearish cloud here. We do have a bullish engulfing pattern that you could see things become a little. I would not be shorting this of course, because we have a bullish pattern right there. I'll show you guys that on the cheat sheet as well, real quick. If you go to double candle patterns here, it is this particular pattern right there, the small red candle followed by a larger one that engulfs it. And that's what you have right here. So I like that, but it's still under the cloud. I wouldn't be adding positions here. CRM is also under the cloud. That's Salesforce. And we have a doji. That's also a negative candle after a move up. So no on CRM. Cisco is trying to break above the cloud, but it hasn't done it yet. It's up 3.24%. The cloud is still technically bearish. The directional movement index is starting to look a little bit more bullish because of that gap up. The weekly chart is also looking pretty good here. We'll see if that can continue moving up. IGV is inside the cloud in the weekly and under the cloud on the daily. That's the software index fund. JP Morgan, under the cloud. So no on JP Morgan. We do have a bullish harami here. What is that? I'll show you this double candle pattern. Large red candle followed by a small bullish candle. That's actually quite bullish. And there's a higher probability that it will move up. It doesn't, again, no guarantees, but let me show you that one. Let's go over here. And there it is. Bullish double candle pattern. So you guys can download this from my Twitter page and then try to memorize these. These are really important, especially if you use charts. You know, you got triple candle patterns. You got triple candle patterns that are bearish and bullish. You like the ones that you see right here. You want to understand candlesticks? Check this out. Okay, let's go back. ABE, Spider S&P Bank ETF. This one is a bullish harami as well, but it's under the Tengen, so it does not get a blue flag. Let's see what else we got here. LVS, Las Vegas Sands, it's inside the cloud. No on that one. Cloud has turned bearish. Chica span is under price. And on the weekly chart, you know, we're finding some support at the Kijunsen, so this could potentially break back above, but right now I would not be jumping in here because it's showing weakness. And we broke through this under this low here. ServiceNow also just showing some strength these last 3 days, but it's in a very bearish decline. I mean, just so you understand, this has dropped. Okay, the last time that it was above the cloud was back over here. All right, where it kind of made sense. That was July 8th of 2025. Since then, it's dropped 33.7%. Right, and it has not been able to successfully. I mean, you can see that little candle right there where it broke for 1 day above the cloud. I don't know if you can see that, but that candle right there. But look where it stalled right on the 200-day. So I would not have been adding a position there, obviously. Over here we had a doji, so no on that one. So we haven't really seen any bullishness in service now for a long time, except for these last 3 days, and that's not enough to basically qualify in my position, in my opinion, for a buy. You've got QCOM also under the cloud and under the 200-day and still declining, down 0.83. UNG, yeah, we had a spike up 6.16%, broke above the cloud, but we still have a bearish cloud here. And although we did break above this prior high here, we've created a megaphone pattern. It's when you have a lower low from the prior one. Okay, so you get that lower trend line there. And then you have a higher high there, so hence creating the megaphone pattern. That's a bearish pattern. I think it's going to be short-lived, this move. If you look at the weekly chart, we are still under the cloud. This is just a few weeks of bullishness because of the weather. The weather's going to change soon. UUP, okay, the US dollar under this 26.92 that happened this week. Ooh. That's not good. That's a weekly level. That 20. So we've been in this, right? Check this out, guys. I think we're going to see further weakness in the U.S. dollar, even more. Look over here. You see that little candle? That's a hammer. That hammer from December 29th of 2023, December 29th, 2023, led to this nice big move. Oops, that you see right there, that expansion, right? We use an arrow instead. It moved all the way up to that level, $30.78. We came up to that level. We dropped. Now look what happened. And it happens so often when I see this. Price came down to that same exact level right there and stayed above it. We had another hammer. It moved up. It found resistance at the cloud in the 200-day and dropped and found support here and here on Friday. But look what happened today. This is significant. The fact that it closed under, it gapped right under that 2692. What else am I seeing that's negative is the directional movement index is very negative. Negative DI is moving up, positive DI is moving down, and the ADX is moving up. That's very negative. So that's the weekly chart. And here's the daily. So we'll see what happens with the US dollar. When Resorts Limited is under the cloud, I'd stay out of that one. There's the daily and here's the weekly chart. Also bearish right now under the Kijinsen and Tenkinsen. You've got XLF, the financials that are in a downward channel here. They broke through this low and staying under it. Now it's inside the cloud on the daily chart, and on the weekly chart, we are under the Kijinsen. It could recover soon, but right now, I'd stay out of that. And then we've got some of our members' requests. Let's look at SSRM, which is SSR Mining Inc., Basic Materials Sector Gold, which actually did spike up a little bit, 3% today. It was up even further. So we had price move up, gap up, right? But then immediately started getting sold off. So we can see all of that again if we switch it to a 5-minute chart. There's the gap up from Friday. So Friday's close was the dotted red the dotted red line right there where it broke above the cloud. And boom, it spiked up. Okay, about 5.33%. It moved up another, let's see, another 3.6%. I'm sorry, another 1.32%. So, and then it's from once it reached these levels here around $28, you can see it stalled and it started dropping and it dropped 3.6%. So, yeah, this would have been a much bigger move because from that level down to there, it was up 6.9 and then it gave away half of that move. So that's why it's only up 3.08 and it's currently under the cloud on the 5-minute chart. So there's a daily and there's the weekly chart. XBI biotech ETF looks good on the weekly, but still under 129.12. Here's a daily chart. It pulled back on Friday after that breakout, and now it's finding support at the Tenkinsen, which is normal after a pullback. Will it break back above? We will find out. But that 129.12 level is based on that candle right there from July 7th. Let's see. I take that back from January 7th. Sorry, January 7th. AMD. All right. We've advanced micro devices, technology sector, and semiconductors. This one here, you can see the prior high of that doji type candle, reversal candle that happened on October 29th of 2025, led to that decline. It came back, came close to it, but then declined some more. Now it's retesting that exact same level. Notice how many stocks are doing exactly are hitting my levels, right? It's because that's what other traders are looking at, folks. They're also looking at these levels. And so that's why it's important to look at prior highs, prior lows, and look to see where we might find resistance and act. Maybe you take profits or half of your profits when you reach a level like that and you see a reversal candle, you know, just a thought. And then wait for it to pull back, and then maybe on the next move back up, it can break through the 267.08 level, and now all of a sudden you got more momentum on your side. But the momentum is starting to decline a little bit here with AMD, just a little bit. If you look, do you see that right there? It was going straight up, and then it's just slightly moving. Now it's starting to go slightly to the right, and then the positive DI is dropping, the negative DI is moving up. And that's what we're seeing here in this reversal type situation. Again, it could be a short-lived little pullback down to the moving averages. We've had that happen many times. We've had it over here, where it pull back, over here, pull back, you know, and then it recovers. But right now, I would not be adding positions, obviously. Okay. And then you have Axon Enterprise Inc., which is inside the cloud, but it's technically inside the. So it looks like February 24th is its next earnings announcement. It's been recovering since these lows here of from November 21st. It's moved up 17.9%, and it's still moving steadily up. I kind of like the controlled move. It doesn't seem very sporadic, like very erratic. That's the word I'm looking for. You can see here we had a pullback, right? And then it bounced. All right. And then we moved up and then it dropped right back to this level here and then moved back up. And then right now we're getting a little pullback. I think we're going to probably see another breakout. But that's what it looks like for the daily chart. On the weekly chart, we are inside the cloud. So it's not the time to be adding new positions, but if you're holding the position, I wouldn't hold that against you because it is starting to show some recovery, potential recovery. The cloud has also turned bullish. The Senko span A crossed above Senko span B. That Chiku span is still above price on the daily chart. It's just like we've re-entered the cloud. That's also kind of a pretty bullish signal when you're under the cloud and you're entering back in. You're breaking through levels of resistance. The cloud itself is a level of resistance. Okay. So I like that. Guys, that's going to do it for this video. Thanks for watching. Thanks for supporting the channel. And again, if you want to become a member, really easy to do that. Just go to my channel here, Blue Cloud Trading. If you like the software that I just showed you, the TC2000, this trading software that I use here, you can get access to that and try it out for free for a month. Just go to my page, click on 9 more links here, scroll down, select this, where it says $25 coupon for TC2000 software. Click on the link. Oh, sorry about that. Anyway, you get the point. You just go to that website, you'll be able to access it, okay? I don't know why it's not popping up right now. Have a good rest of the night or day, and I'll catch you all in the next video.